What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is February 11th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we've got a lot of things to discuss, from taking a look at a wide range of cryptocurrencies that are showing breakout patterns to asking a fundamental question as to whether or not Bitcoin volatility is increasing or decreasing. And after that, we're also going to be spending some time to take a look at our partner Clio, and then dive into a question of what equity markets I see value in over the next couple of months, all right? So we've got a lot of things to discuss in today's update, but I want to let you all know that CoinMarketCap is actually doing an attire or swag giveaway. So if you all are interested in getting some free attire with the CoinMarketCap logo on it and branding, then you can definitely check out the link down below. There's going to be a Google form where you can fill out all the information you need. Sadly, it's only for US participants in this case, but hopefully we can do one in the future that will be able to ship out to a variety of other countries. All right, so let's go ahead here and take a look across the board on the market, guys. Diving back here real quick, we can obviously see that the overall tone here from some of the large caps is either they're holding neutral over the last 24 hours or definitely in the green. But if we take a look here in the sense of the last 24 hours, we can see that the broader cryptocurrency market from the small caps to the mid caps are definitely leaning towards the upside here. We're continuing to see a clear gain in altcoin dominance. And if we take a look across the board here, we have some large plays here like synthetics leading the way for the DeFi space, but also plays like NANO as well, up 9%, and then also Chainlink and Basic Attention Token, two of our plays for the year, up nearly 10%. So this is really good to see here, guys. Not to mention Ravencoin and Steem down here around 6.6 to 6.8%. I really like seeing this. Again, we're starting to see some of the solid plays here gaining volume across the board here. And there's, of course, a lot of other plays here, guys. But it's nice to just generally see here that the broader market is still seeing a growth in optimism and risk-taking as we start to see Bitcoin ticking up higher. So we're seeing a little bit of a, I wouldn't want to call it premature, but I think we're definitely seeing that kind of sense of confidence come a little bit earlier than we tend to see in the last two altcoin, at least what we tend to see in the last altcoin cycles in the cryptocurrency space. Now, one thing that I want to talk about is obviously Bitcoin here before we dive into talking about altcoins and these kind of breakout patterns we're seeing. We're really seeing a lot of strength in Link, which I want to talk about in a moment. But the major thing here for Bitcoin, what I like to see is that we're holding generally around this range. We got buyers coming in here at the low 9,000 or the upper $9,000 range. And it seems like the real question here is whether or not we're going to be holding above this previous range of resistance here when we had the China news back in late October to early November. So again, that's really all I'm watching for here. If I was to just generally draw a very simple illustration here, I'll go ahead and grab the polyline tool. I'd want to see this come down, if anything, and then rebound back upwards and make it support, right? And start ticking up back here. Now, the next point of resistance that I really see happening, and I guess I kind of drew my line a little too long term here, I would expect this is going to happen a little bit sooner. My major next even that I'm looking for is resistance around 12,000 here. And the reason I say that is because that's the next point on the logarithmic chart from taking the previous high back here in 2017, lining it up with the previous high here in 2019, and then setting in for a third high here. Now, it could be a breakout point for Bitcoin. Who knows, we could be getting that into the halving event, but quite frankly, I think we're going to get up here to 12,000 and we're going to pull back down to a lower support level, maybe like 10,000 in this case, and then we're going to start moving really higher as we go through here. As we have the halving event, we're going to retest back to the highs at 20,000. It just seems like the next logical point to test those. So that's good news here. I mean, if we have a minor pullback here down to this previous resistance range to make it support, I'm still confident in this case that we're going to be seeing Bitcoin tick higher and as much as 20% here from where we're at right now. All right. So again, really good thing to see here. I think we've got a little bit of follow through still to go here on Bitcoin ever since we tested down towards the support range. It's really not crazy to think that we're going to be going from the upper $6,000 range up to 12,000 here over the course of a couple of months. Bitcoin can do that. We saw that in the past, right? So let's go ahead here. Now we've talked about Bitcoin, I want to talk about Chainlink as well as a lot of other altcoin plays. So Chainlink is breaking out with a lot of confidence here. Logarithmic chart, I think, was showing clearly for a long time this was well due, and we're getting it a little bit earlier than I think some expected. Some were expecting this in March or April, but it seems the bulls are too confident on Chainlink right now. We're over the $1 billion market cap back a couple of days ago, and now we're really starting to charge forward with what seems like a lot of FOMO. I'm really getting across the board, guys, in the crypto space. I'm getting like early kind of like January, February vibes here with the altcoin space. Again, a little bit earlier, sorry, I wanted January, February of 2017. I want to be specific about that. Well, it would be actually pretty practical here if I was saying March or April for 2019, because we did get a lot of confidence resurging back into crypto markets. But the major thing I'm correlating this to is the kind of early phase of the 2017 rally. And we're starting to see, I think, a lot of the plays that are going to be similar to Ethereum, kind of the front runners in the market and become some of the new large cap plays that really lead in this cycle are really starting to showcase and shine here. And I think Chainlink's one of them. We've gotten above the resistance range here. It's only a question now as to whether or not this is going to hold. And what I would like to see even more is not only more volume here in the sense of Chainlink, but also I want to see this continue climbing higher. I want to see growth here. And that's really going to give me confidence that the further away we close from this line here, that this is no longer resistance and that we are set out for the next run up here for Link, where we could start to see a really parabolic run here where prices can continue to climb higher, even as Bitcoin is gaining a good amount of price action over the next couple of weeks. All right. So that's what I want to see here. I want to see, again, continued higher lows and higher highs here for Link. So far, it's been doing that. We were showcasing that for weeks. It was giving us a premature sign that this was set for a breakout, that we weren't coming back down much to test the support line, and that we were ready to test for higher levels. Another one as well that's finally picking up some steam is Basic Attention Token. And we're going to talk about this in the sense of a fundamental use case in the crypto space that's picking a lot of traction later on in the video. But I like to see here, again, higher lows here, giving this sign here. When you see for a multi-week period, guys, where the lows are getting higher, again, it's not very significant in the sense that the lows are at a higher level, right? They're just at slightly higher levels here, but it showcases that buyers are getting eager. And not to mention as well, if you take a look here at the resistance here, you can see that we not only broke out above it, but we came back down, made it support, and now it looks like we're very much confident in the sense of the price action here for a higher level, not only to test a higher level resistance, but also hopefully to really kick into our cycle here where we start to test towards these longer term resistance marks on the Bitcoin comparative chart. These are really my main targets for the cycle. So very interesting stuff here. Again, not analyzing or over analyzing price too much. I mean, if you want to take a look at the weekly, I think it becomes even more clear here, guys. You can see here, price action looking good, setting a significant higher low, right? Back towards a range that we've seen back here in the past. So nice to see. Now, Ravencoin, really picking up here. The weekly, I think, puts it very clearly here, guys. This looks like it's setting up for a very similar breakout. And all I'm looking for now is volume. Now, we're taking a look at Bittrex, where we're probably not going to find the volume. So let's go ahead and take a look at Binance. And we can see that that volume is starting to come in. And that was from last week. Now, again, we're just, this is our second day of this week here. So we can't take this volume candle too legitimately. We have to wait and see. But a good sign here is that by maybe midweek, if we're starting to see an outpace of volume here and price action starting to test up towards this resistance range and looks like it might break out, I definitely will consider opening a position in Ravencoin. But we'll have to see. Time will tell. I do like here what I'm seeing on the daily. I like what I'm seeing, on the weekly. And I also like what I'm seeing on the daily here. It's just a matter of getting back above here with a good amount of momentum and volume. I like the consistency, but I'm not seeing, again, the kind of momentous multi-day green breakout that I'm going to look for before I really build a position. Can we get this on Ravencoin? It's not a guarantee, but I do think, we've seen it 2 times in history here, right? We've seen 2 significant breakouts. And even if, we're to enter in a position around here like 370 sats, you can always, for example, take profit here around this range here to at least solidify some profits. And, it's kind of a good midway balance between betting on the much more cyclical rally, right? You could have, for example, 50% of your position you take out here and you let the rest ride, right? Or you have a trailing stop. Either of those work well, right? Again, it really depends on what you guys want to do. Now, I want to talk about the larger caps here as well. ETH to BTC, looking really nice here in the weekly. So I want to go ahead here, guys. I'm going to turn on my drawings. And we can see here on the chart, right, that it looks like we're very, very close to a breakout. We'll see that this is similar with Litecoin as well. Now, the one thing that does kind of interest me or make me concerned is that I noticed the other day that we had a general resistance range as we did back here with Ethereum. right? We can see very similar resistance range around 3,500,000 Satoshis, right? Where we topped out many times. We also did that back here. And then we eventually came down to a lower range here for Ethereum, right? And then we came up to this price range where we're at right now. The one thing I'm concerned about is history showed us a very sharp decline here in Ethereum with an eventual rebound in a much shorter period of time. And quite frankly, again, that's something I'm just keeping in mind if we're going to repeat that. I think we'll really learn soon enough. If we break out of this area, then I don't think that's going to be a burden at all. But if we do start to turn down here, we might have a dip below and generally come down to the support range. I don't see any scenario where that happens unless there's a lot of FOMO into the Bitcoin halving event. And quite frankly, I'm just not seeing that. Right? Not to mention, I don't see it where Ethereum couldn't keep up in that scenario because we're obviously seeing altcoins pick up earlier. But it's just something to keep in mind. I drew it on the chart here. You can use a really cool tool here, the bar pattern tool on the sidebar for trading view. And I basically just drew it from this. It would generally be because it's at generally the same price range here. So I just basically took the general price action here, drew it there, and this is what it would look like. So we would be getting a correction down into May and towards the halving event and a breakout up here, right? Just food for thought, right? Not something to take literally, guys. I'm not trading off of this. Right now, I'm more than anything, I'm bullish on Ethereum. I have some positions in ETH, but we'll have to see if it really starts to break out here and spawn the cycle a little bit earlier. I think it could with the DeFi space. So another thing as well, Litecoin, very similar here, right? We're seeing very similar patterns with its previous ratio, showing signs of confidence here. I want to see it hold on what was resistance back here, as well as previous support in the past. And then after that, I think we could really start to tick up for Litecoin. Litecoin's a very simple play. I mean, if you think about it, you know, if you get anywhere near an opportunity around here at 600,000 sats and sell up here around 1,800,000, it's a 3x compared to Bitcoin. It's just like gold and silver, how you have the gold to silver ratio, where you have this consistency of ratio ranges where you want to get bullish on silver, bullish on gold. Or vice, you know, and again, vice versa, it changes. So taking a look at XRP, this will be the last one we take a look at for the day. The only thing I like about XRP is the higher lows, very similar to BAT here, but nowhere near the kind of momentum that we've seen in the past. Really not eager about this over the next year. Sorry, guys. Price action isn't really showing it. Until we see that follow through, until we see that volume, I'm not eager to make a position. All right, so let's go ahead and talk about this very interesting question. Is Bitcoin becoming more stable or more volatile over time? Well, I'm going to go ahead, guys. I'm not going to drag it on, but I'm going to go ahead and give you a very clear answer, and that's actually that Bitcoin is becoming more stable, and it is reducing volatility historically. This is very similar to gold markets as time progresses. And a lot of people would ask, Nick, how do you know that volatility is decreasing in the long term? How do you know that it's becoming more stable? It sure as hell is still going 5 or 10% to the upside or downside on some days. Well, it's a very good question, but when we ask this question, we can't talk about it solely on a daily time frame. We're talking about this over a long period of history. Are we seeing a general reduction in volatility where we're seeing much less 20 or 30% move days and much more 5 to 10% days? And the answer to that is yes, we are. That's exactly what we're seeing. And we're seeing many days where Bitcoin sometimes is sitting around 1 or 2% in price difference. So how can we go ahead and look at this? Well, first off, there are a ton of charts out there. If you guys want to look at general volatility measures, they will show you historically that Bitcoin is setting lower highs on volatility with each of its cycles. But there's also a much more simple explanation for this. And they talk about it throughout this article here. So they observed, for example, the halving events. This is actually probably one of the best periods of time to look and see whether or not volatility is generally increasing or decreasing with each halving cycle. So we can see here, for example, that Bitcoin went from around, sitting around $10 here at the time of the halving, all the way up here to $220, not in the overall kind of general like cycle for cryptocurrencies, but in this short-term bump up here, right? We know that afterwards in this period of time, we actually continued higher towards 1100. So, I mean, if you really want to talk about the broader cycle here, we were talking about going from $10 to 1,100. So more than 100x here, right? More like around 110x. But in the short term here, this is the equivalent of like going from like just really a couple of 4 months here, right? Just take that into mind here. Watch the time scale. We go from $10 up to $220. So an absolutely parabolic rise here within a matter of 4 months. That's very volatile, right? And also a very volatile decline when we went all the way from 220 down to 80 bucks in a matter of really a couple of days. Now, compare that to the halving event in 2016. Again, bear in mind, same time frame here, right? Going from July here over the course of just a couple of months. And we can see here that even though we did rise up here, we continue to set new highs in the short term for Bitcoin. Interestingly enough, the major thing to take into mind here is that we went from around $650 to a total at the end of it around $980. So again, very important to notice here that each of these cycles here during the halving event, we're seeing less and less volatility, and we're not seeing as significant of gains, but also not as significant of corrections. So this is what plays into the whole theory here, that over the next couple of years, Bitcoin is going to become more of a store of value. Now, kind of bad news here is that this means that Bitcoin's gains in each of the halving events, as well as the general broader cycles, are going to be reduced. They're not going to be as grand as they were in the past, because you're talking about an asset that is adding new digits with each cycle, right? We're going from something that used to be a $10 million asset to a $100 million asset, and that's a very easy amount of growth to reach in that case. You only need a certain amount of liquidity in order to do that. And then when you're going from a $100 million asset to a $1 billion asset, it's a little more difficult. And then a $1 billion asset to a $10 billion asset, and then a $10 billion asset to a $100 billion asset, and then to trillions of dollars of valuation. It's a very different gambit in that case when you're talking about growing that same, going at that same growth rate, right? In order to go from a billion to a trillion, it's much more difficult from a million to a billion, right? So anyways, I'm saying a lot of the same words and stuff, but I hope that makes sense to you guys in the sense of just understanding volatility. And I hope it provides some really good perspective and just kind of helps people step back and not get caught in the day-to-day volatility, guys. It's not worth worrying about day-to-day price action. If anything, if I see those anomalies where there's a severe decline in price, in that case, I usually am incentivized to add into my positions personally because I know it's usually short-term. And it's the same as we've talked about here with Bitcoin, guys. I mean, you just simply take a look here at the market. You know, there were so many people fretting back here about Bitcoin's price, and now we're back up to a range where if you bought even as far back here as July, you know, you're up on your money. So again, it's why I tell people, you know, as we talk, I think people really like the comment I made. It's not a comment that I invented. It's something that has been a general investor term for a long time. Buy when there's blood in the streets. Buy when there's fear. Buy when no one is either interested or people are absolutely like just God fearful, or I guess they're like God-fearing of the crypto market in this case, right? I guess that's usually a term. This is not probably how you use the term, but they're just generally fearful of the state of the market. That's a good way of just simply summarizing it. All right. So real quick, one last thing that I wanted to talk about in the sense of good use cases that we're seeing in the crypto space. I'm not saying that it's the most used one, but one that we are actually seeing the most traffic for in the sense of ERC20 tokens is Basic Attention Token. We're seeing a mass amount of actual real use case for the Basic Attention Token in the Brave browser. It's actually one of the most transacted tokens on the Ethereum network in the sense of active addresses, and Maker as well has one of the largest accounts in the sense of higher active addresses. Now, this makes sense to me in the sense of bad, and this is why it's one of our top 3 plays for the year, because mobile ad block users are growing like wildfire. It is actually more than 5x here since back in 2014, where we're at right now with the latest numbers back in mid-2019, and I bet the numbers are growing even steadier here. Now, again, this is going to continue climbing here as we continue to see not only desktop users, so this is actually, we're seeing a decline here in desktop users, interestingly enough. This was a big shock to me. I thought desktop users were growing in the sense of ad blockers. But I'll be honest, I think this is declining because there's just a general decline in desktop users and people are using mobile more actively. But I was severely shocked to see this kind of high count here. Now, the great thing about this is it proves that there's a market. And even better is that even though there's a wide variety of different service providers that block ads, I think Brave has positioned itself well because it not only uses Chromium in this case, or uses a lot of the framework that Chrome uses in order to provide a very clean experience, but outside of that, with the block of trackers and ads, it also provides the opportunity to earn and receive advertisements, in this case, that are privacy preserving. And I think for a lot of people, even if it's 10% of this market, 50 million users would be massive. So that's the point I always drive home here. I think that there's still so much growth potential for Brave here to really start gaining market share. And it services a very big need here. So again, with large players like Opera doing well, I think Brave has a lot of room to grow with only 10 million users at the moment. I mean, it's a huge milestone, but I think that we've got a ways to go in servicing this market and a lot of income potential for a lot of users across the board. So I'm excited for that, and I hope to see Brave continue to grow, and it's why BAT is one of our major plays for the year personally. So I want to go ahead here. We're talking about BAT, we're talking about Chainlink breaking out, we're talking about a lot of cryptocurrencies. And one of the things that I think a lot of people are eager to do is to try to trade these markets. Now, I do believe there are trading opportunities, but I'm a big believer in following a strict strategy. And for Clio, our sponsor here, we're going to be talking a little bit about how we can go about building a trading strategy that helps to automate a lot of this process. Now, the cool thing about this is I've generated what's known as an altcoin swing trade strategy. That's what I want to call it. And the altcoin swing trade strategy, say that 5 times fast, is basically a strategy that is something I evolved over time and stuff I worked on over this last week that basically utilizes trades here on price declines through a variety of cryptocurrencies. So we're not just trading one asset, we're trading 3 of my favorite cryptocurrencies against USD Tether in this case. So let's go ahead here. We'll go ahead here and we can see that we not only have a great return here, almost doubling since the actual backtesting period. I think our backtest period is from February, it's February 11th of 2019. So basically almost on an annual basis here, up nearly 100%. So let's go ahead and check the rules here. Well, it's a very, very similar rule set here. We can see we have 3 different cryptocurrencies we're watching and 3 different positions here. We'll make up 33% of our balance if we get the opportunity. But basically, when any of these given assets is down by a certain percentage mark over the last 3 days, these were the kind of optimal numbers I found while backtesting of 10% for Link, 10% for Raven, or 25% here for BAT. Over the last 3 days, I buy a position into any of these cryptocurrencies. And I do it with 33% of my available capital, as well as a stop loss of 20% and a take profit of 80, 30, and 70% respectively. Now, the cool thing about this, guys, is that it's not only a very profitable strategy here. I mean, 100% in a year is really good. But along with that as well, we can add other things to these different strategies. We could add a close rule if we'd like, or we could add other standards here. Maybe, for example, for our positions into basic attention token, I want to see BAT dominance drop to a certain significant level, right? And I can type in basic attention token, or just simply basic, right? And right there, I can simply add that in. Or maybe I want to add a crypto fundamental here, right? I want to add some kind of, a technical indicator. So maybe I want to add, for example, like the RSI is at a specific level. RSI is one of my favorite personally, so I like to use it a lot. The RSI is, below maybe a value, and it's going to go ahead and give a predetermined value of 10, but I can click here and click edit condition. Maybe I want it below 40 just to keep it simple. And there we go. I've updated my strategy. And I can do that again. I can add multiple conditions or multiple standards in this case for each of these different types of conditions on the strategy. Now, again, we can get as complex as we want with it, but I think this is a very valuable way to go about it. Again, one that showcases utilizing multiple altcoins in one strategy so we can get a diverse range of exposure. We're not locking ourselves into one asset and not sitting on the sidelines when there could be value in other assets. I mean, as a trader, if you're going to be trading more actively, that's kind of the way you have to go about markets in this case, is to make sure you're looking for a variety of opportunities. And it's a big strategy or a kind of big mindset that we talk about with the SMS strategy, the squeeze momentum indicator, the MACD, and the stochastic RSI, where we talk about when there's not a trend here that looks optimal to the upside, we look for another market, right? So again, really interesting here. Again, if you guys want to follow this or copy it, you guys can go over to Clio.one and you can actually sign up for an account for free. Build a custom strategy, test around, see if you can build a better one than me. This is definitely not a perfect strategy. There is never really a perfect strategy. And again, things evolve over time, but try it over different backtest periods and see what you get. But I really like this. We can go ahead again, deploy the strategy and see. Let's see if this time we actually have a better return. So it ends up that we get something relatively similar because in many cases, if something's down around that kind of percentage range, we're probably going to have, or in the case of BAT where we changed it, it's probably going to be that the RSI is already around or below 40 when we have a 30% correction. But it's really cool here. You can see generally over time how we performed. You can see our actual trades here. Good mix between Ravencoin, BAT, and mostly trades on Chainlink here, as Chainlink has really been the momentum play over this year. But anyways, guys, I think this is really cool here. Really good example here of Clio. And definitely, if you guys are interested, check out the link down below to test out Clio today. Now, one last thing I want to talk about here in the sense of markets that I'm interested in. We've got two markets that have really gotten me intrigued here. We've got energy markets, predominantly what's going on in the uranium space, as well as the solar sector in this case. I think those are really going to be two markets that I'd look at more long term, but also what's going on in the fossil fuel based energy markets. I think we're going to have, yet again, as we had back in 2015 and 2016, a massive glut in supply for oil and natural gas companies. And because of that, I'm looking at a lot of plays across the board. So, for example, we can see a lot of these plays here are going in through severe corrections. CRC is one of the ones that I'm really watching here that might test down towards its lows back here in February 2016. Again, a lot of these plays I look for when there's just an absolute oversell on the market and then there's finally some supply cuts. But this is months out. More than anything, I'm more eager to invest in the renewable companies, right? The TAN ETF showing a lot of confidence here for solar companies with the two higher lows here on the monthly chart and consistent uptrend here, as well as what we're seeing in the EV market, right? We've been talking a lot about what's been going on with Tesla and NIO. So there's a lot of different plays here. Well, this is a big thing we kind of talked about in our newsletter. But these are some big companies that are really starting to gain here in the EV space. So I think that's going to set a big demand here for a lot of the energy producers on the grid. So we're talking about renewable companies, we're talking about nuclear, a lot of demand coming through there. And then also for nat gas eventually in the future. So very, very interesting kind of shifts going on here. Major thing that I want to stress as we take a look at energy markets is taking a look at nat gas. Nat gas looking really, really bad right now. It's looking like it's going to be continuing in for its channel here. Go ahead and turn off our drawings here, but you can see here that this general channel that it's been in, it looks like we're going to be down to $1 per CFD. And for oil as well, CL1, we can see here, again, setting lower highs and looking like it's going to break down back to where it was back here in 2016 in the next couple of years. So again, it's going to be a bloodshed for a lot of oil producers and natural gas producers, but that's where we can start to find value when prices are down. And in the other sense of the market, I don't want to say the term because I know it'll probably remove my monetization, but we can see here the green markets we're also watching as well. We will see over time again, finally, hopefully, another low here. And then eventually, once we get another low, see if markets can get some traction to the upside and set a higher low. We still have not seen that. So again, that's just one thing that's one thing that I'm looking for right now is to see higher lows here. I mean, we can take a look across the board. Kronos, for example, fading down on practically all of its gains here. We can take a look as well at CGC, fading back down again. Definitely still up from its lows, but Tilray down to back down towards its lows. We have VFF here, new lows. A lot of different plays across the board here. Charlotte's Web down here practically towards new lows. CTST practically down towards its lows. So I'm not liking what I see here. The general broad ETFs demonstrate this. New lows in MJ, new lows in YOLO, and THCX at new lows. So again, we're going to be waiting patiently for some traction here in the markets, guys. That being said, though, I hope you all are having a fantastic day wherever you are. If you guys like this video, drop a like. And if you have something to say about the topics we discussed, leave a comment down below. But until the next one, guys, I'll see you all in the next video. Stay tuned.